Hey guys, welcome back. I wanted to go over the S&P real quick after today's crazy price action that kept bleeding out all day. I wanted to revisit those cycles that we discussed in the previous video that I outlined these patterns that happen within the cycles. So I actually went back farther now and created even more of these going back in time. So it's always that every other one right there. Skip one, there it is right there. Skip one, there it is right there again. Skip it, there it is. Skip it, there it is. And over here you had this crazy crash that happened. The arrow never went up, it went down here. So as you can see, when these consolidation patterns happen, generally the price does stay inside of it. Here is obviously another exception that I wanted to take a look at real quick. So in this scenario, what I'm seeing is that once again the shape of the wave actually did have that second peak in it right there, but then it completely failed and came down at the midpoint of the cycle. This would be considered an anomaly, something that doesn't generally happen, and you'll be able to see why I think that over here obviously the market was already in a downtrend at that moment. So once that second bottom happened right here within the middle of that consolidation pattern, you actually had the bottom of the price itself right there. So we can sort of measure from that second peak to the bottom, and that was a 17% drop right there. And then the market quickly recovered in a V and just kept going. Right, so here is that pattern again. In this scenario, you could see that the second drop never actually happened. You did come up in the second part right there, and then you kind of kept going until the end of the consolidation pattern, the end of the cycle, and that's when the price actually collapsed out of it. That fall was 35%. That was a big fall. Okay, so now going to the other cycle, let's check this one out. This one right here, you could see that it never even corrected for that second drop right there. Did come up right there, came up with the second leg, dropped, and then kind of followed along basically exactly with that pattern. That's that cycle right there. Again, we skip one because we don't find the same structure within these cycles. That's why I skipped them. The cycles, the structure is different. I could probably average something out right there too that works with that specific cycle, the middle one. As you can see, there's also something there, but I didn't do that. I'm just trying to figure out where we are right now. So here's the pattern again, right? It falls. This one's a little bit delayed, so technically I could even sort of shift it over, but it's not really necessary because the price does at some point end up actually following exactly with the legs. So sometimes you deviate, right? So that's why you can't look at this on a daily basis and go, oh my goodness, it broke away from the pattern, it's done, that's it, this is gonna crash and so on. Well, no, the price sometimes is delayed from what is actually happening with the pattern itself. Here we got to the end of the pattern, well, past the midpoint, right? And that's when price corrected. You corrected at the end of the cycle right there, boom, way down. So that's not relevant for our purposes. I'm trying to figure out how much we can drop within this exact moment right here, this exact moment. So let's take a look at it here. Here we were able to get to the top of that second leg right there, come to the bottom. Again, we follow the price and up and out. Here we are again. I mean, I could do this all day with the price going back. I don't know, you tell me how many years to go back. It doesn't matter. It's always the same sort of pattern that's taking place right there. Here it is again. EV lasted throughout. the full pattern, and then we broke down at the end. So what I wanted to look at was the one that I looked at that had a bigger fall on that second leg. Not that one. Which one was it? Not that one. Not that one. This guy right here. This guy came back up and then crashed down. Well, that's what we looked at that one already. There was another one. There was another one. There's one that resulted in like a 10% correction. Here's one where you come back up to the top of the leg. Okay, here it is. Okay. So this is another sort of anomaly, right? It happens a little bit differently every time. The point is that even when we did have that second correction for that second leg down, which is where we are right now, this was, let's take it from the top. This was a 10% move down, at which point the market completely recovered and then kept going up and out. So what's the point with this? Well, the point is that right now we could be looking at something like this if the price continues to keep crashing down, which took just 1, 2, 3, 4, 5, 6, 7 days, and then corrected in another 7 days. So you had a 10% move down in 7 days. Crazy fear, crazy panic, probably all the way back up to the top of that second leg. 1, 2, corrected, and then kept going. So what is interesting to me is that this might be exactly what the market's doing right now. This might be it. You can see how the RSI is completely overbought right here too. So you're sitting here thinking, oh my goodness, this is done. Here we crossed thunder and it's gonna go crash to 40% down. That's it, it's done, right? Because that's what it looks like here. Doesn't this look like a failure? And this comes up as a retest, and now you're going to continue to move down. Elliot Wavers would be like, oh, that's a wave 1, 2. This is 1, 2 of 3, and this is now beginning here. Oh, this must be 1, 2 of 3. So now we're going to go down in 3. So 1, 2, 1, 2, 3, 4, 5, right? That's what the Elliot Wave guys would say right there. So no, that's not what happened. You just kept going. So another thing that I'm looking at with that is that the VIX was completely elevated up here. I like to keep the VIX on the chart. So the VIX was completely, totally elevated here. That's also not where we are right now. We are not in this kind of panic zone. So if I'm gonna look today and keep that in mind, I don't know why I don't just click the arrow. There we go. Okay. My VIX chart that I keep on here, I basically identified this zone as the must-buy zone, right? So every time the VIX hits here, like must buy, VIX hits, must buy, VIX hits, must buy, VIX hits, must buy. Hey look, the VIX hits, what do? Panic and sell, or must buy. Okay, so the point of this exercise was going to be, what if we do have a 10% correction right here? That puts us at, let's say 6262, somewhere around there from that high. 6262. So that would mean over the next like 7 days, 1, 2, 3, 4, 5, 6, 7, let's say around there. Let's say around this arrow. Let's move this arrow for now. Let's say the next few days it could come down something like this, 6262 was the target right there, and then come all the way back up, correct a little bit, and then continue upwards. So that is what we could be looking at. We could be looking at this crazy crash that happens in just a few days, which would be an anomaly, by the way. Or we can just follow along with this. Here's the timing of it. Oh, let's correct that a little bit, something like that. Here's the timing of it. Basically, this should be your buy zone, your buy trigger time wise. So you can put one right there. Like, no matter what the price does, this should be bought. Let's say November 20th, right? That's what the chart says. I'm not telling you to buy. You guys have to make that decision, but you could see what I'm looking at, how I'm looking at things. I'm not looking at things like other people do. I'm not trying to use a different method that is not really well known. All these guys are kind of using trend lines, and yeah, I use trend lines too. That's not to say they don't have their place, because guess what? A trend line is actually nothing more than a moving average. See how the trend line kind of sticks to the moving average, basically, a little more or less. But that's why trend lines work, because they're, well, depending on what, I guess, timing of the moving average you have, right? So here we could draw the trend line that follows exactly with the moving average that I have on here, and you can see that we broke down below that. Okay, well, it doesn't always help to look at it with the trend lines, because trend lines always break, trend lines extend out. They're always stopping people out, and stop hunting and all that stuff. So I like to look at it through the actual cycles that are in place. And what we could have is that this is going to be the arc, the timing arc, the cycle arc, whatever you want to call it, that catches the next price. Right? So in a normal market where it's nothing crazy happening, people aren't jumping out of the windows, and aliens haven't come here through 3 AI yet. Maybe that's why we are crashing. Maybe they know something. The point is that, we could be hitting here, and then come down to touch it again, and then continue upwards, kind of get to the bottom of it, and have the price follow along that way. There's still no crash on the horizon. It doesn't matter what today's price action was, because as you saw, these moves happen in 7 days, 5 days, 6 days, very, very quick. You are very close to getting another buy trigger right here. You are very close. This one right here, this one right here, 2 buy triggers. You're almost there. You're almost there. This is about to pop another one. What happens when we get these buy triggers? You could see what happens is good stuff every time. Here's another buy trigger here that worked. Another one here. So the point is, this is about to put another one down, and the price doesn't even need to drop that much farther for it to be in the buy zone. At that point, the RSI will continue back up like we saw before, and this is just gonna keep staying above the midpoint and come back up to the top, and the price will go back up, and so on and so forth. So will there be a crash? Will there be a correction? Sure, it could be, but it's not going to be now, because you are not done with this specific cycle. You're gonna have a chance to have your crash at the end of it. At the end of it, like we saw so many times. I mean, sometimes, like I said, the price just continues up and out, up and out. That's what David Hunter's talking about. But in other times, you do have a correction at the end that takes place, and this one resulted in, at the end, from that midpoint leg, we'll take it, you had a 27% drawdown. So yeah, from the midpoint is when when you could start getting defensive and worrying about the market starting to correct. As of right now, you're not even up in the second part of this consolidation move yet. So that's it for now. I hope you found this helpful. Hope it clarified some of the crazy price action today. You can see that we are still inside the downtrend, technically, right? There it is right there. So take a look at that other video that I'm gonna be uploading for the VIX that's discussing how to actually look at the VIX and understand where price might be going using the VIX. Alright, so that's the video for today, guys. Hope you found it useful. If you did, like, share, subscribe, all that good stuff. I know you're probably not going to because nobody ever does, but if you remember, just leave a comment, leave a like or something, and yeah, we'll get back to business tomorrow. Have a good one, guys.